You're welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition will look at assessing post PIA reforms in Nigeria's oil and gas sector. Mr. Chukwuemeka Osuji, partner oil and gas, Olaniwun Ajayi legal firm, joins me for this conversation virtually.
Thank you very much, Otto. Good morning, everyone. Happy to be here.
Yes, thank you very much. Let's begin with your assessment of the policies and programs and also projects so far in the oil and gas industry. And I'll take you back to our conversation 11 months ago, very interesting one, where I asked you around the subsidy regime, which of course is part of the facing by the petroleum industry act, which we're looking at today, the post PIA impact and reforms. I want to ask you, because when I asked you about the subsidy, you said very clearly that there has to be clearly set out by this administration. They have to follow through and of course ensure that it's executed effectively. Looking at that now, would you say that's been effectively managed?
Well, thank you very much. And thanks for reminding me of what I said a couple of months ago.
Yes.
The truth remains, as I pointed out then, still rings true now. The subsidy itself was removed as a matter of law. As I mentioned, the PIA itself had set the tone for the removal of the subsidy. And what had happened was that the last administration got a bit of an extension from the National Assembly to allow the subsidy to carry on for a term. But as soon as this new administration came in, the term had pretty much expired. So what happened was really more of an announcement of the fact that the subsidy had expired. So it was already something that was already out of the door. One thing that was expected for most people, I would imagine, was that the removal of the subsidy would come with pains. And understandably so, because of the fact of the earning capacity of the average Nigerian is not such that it can withstand the full effects of the shocks of the removal of the subsidy. As you, of course, you've seen what has happened over the last couple of weeks and months, the implications on not just transportation, but pretty much everything reacted to the removal of the subsidies. So in terms of managing it, it's almost like having a severe injury, right, which would take a period to heal properly. All that can be done from where I stand pragmatically. I know this is not a very popular opinion. People would rather hear it was badly managed, the subsidy shouldn't have been removed. But I think Nigeria had gotten to a point where the negative implications of retaining the subsidy was beginning to outweigh the positive implications of retaining. So I think it's something that just had to go. But in terms of the management, the government has done the best that it thinks it can do. I still think a bit more can be done in terms of looking, for example, we've seen the policies and how the implications on the economy. I think a whole lot more can be done to sort of manage and mitigate the implications. That's pretty much why I think I can leave it for now.
Yes, a whole lot more can be done to mitigate the situation, especially the high cost of fuel, also known as premium motor spirit. It's quite high across the country, and a lot has to be done so it doesn't really bite households who are at the receiving end.
Yeah.
But let's look at since, of course, the Petroleum Industry Act was signed into law. How do you assess the steps taken to incorporate joint ventures in the oil and gas industry? Of course, we always talk about the success story of the Nigerian Liquefied Natural Gas Company. We've seen government equity, seen private sector equity, and how efficiently managed that venture is, which of course is a case for what we're talking about the Nigerian National Petroleum Company Limited, which last time we had this conversation, we also raised the need for it to also be incorporated to a level that can be listed on the markets. So what, from your analysis, are we making the right steps to incorporate joint ventures, learning from LNG, and what needs to be done in that regard?
I think it's important to flag that what happened, what the law had done was sort of to set a tone, to set the tone for this to be done, and also to introduce certain incentives that will apply to what is known as ISPs, that's Integrated Strategic Projects, pretty much. Yeah. The law didn't introduce incorporated joint ventures. You can run your enterprise through a UJV, an unincorporated joint venture, or an incorporated joint venture model. That has always been the case. It's just that historically, the way the oil and gas sector in Nigeria started and transitioned, traditionally, the UJVs became the model of choice for so many reasons. And very few people operated the IJV model in the upstream. You are more likely to see the IJV model in the midstream and in the downstream. But so it's not as if the law introduced the IJV models. It's always been there. What the law did really was to just introduce incentives if you then want to have what is known as ISPs, integrated strategic projects, right? So if you cite those projects in a way that meets the conditionalities under the law, then you can benefit from some of those incentives. So in terms of now companies transiting to that model, we've not seen that happen in the upstream. It's something that I think the existing companies in the upstream, I think they seem to favor the existing models that they have. And on the back of these models, as you're aware, a whole host of contractual arrangements, financial arrangements have been made on the back of this model. If they now begin to transit now, of course, they have to then walk through the entire gamut of managing the entire process of transiting all the existing arrangements to now counter. So, for example, borrowings that were made, for example, to just an operator on the UJV model, you then have to now factor in how to transfer the loans to the IJV, that's the new company you want to set up, etc. It's an entire body of work, and it can be quite daunting if not properly managed. Then, of course, you then need to think about how to deal with all the existing liabilities that sit on the assets. For those that have been operating for a while, how to transit that to the IJV. It's quite a whole body of work. So for those who are currently operating the UJV model in the upstream, I think they've taken the call or the view that to the extent to which that model is working for them, they have not seen the need to transit. Perhaps when new assets come on stream, then perhaps the owners or the licensees or lessees of those new assets can at that stage then decide to immediately start operating those assets under the IJV model, and that can more easily be done. But just to put it out there, I don't think you're going to see a sudden burst of IJVs in the upstream. It's not likely to happen soon.
Okay, what about the NNPCL? Don't we see something happening for its upstream operations? Don't we see a level where, last time we talked about what must happen for it to even get to an IPO level for more efficiency? And you've seen again, Chukwuemeka, the challenges with the state oil company. We're supposed to operate at a big level, like what we see with Saudi Aramco and even Petrobras and other state oil companies.
Yes. So you're aware that there's NNPC, the company itself, then there's the group.
Yes.
So NNPC operates through NNPC and then NNPC Limited. And there are a whole lot of companies, NPDC, so many other companies within the group, all of whom operate across the entire value chain.
Yes.
So, and a good number of those companies operate through the IJV models. That's actually what they are at the moment. So your question is likely to be for the upstream operations by NNPC and NNPD.
NNPC option, yeah.
Whether they will migrate to the of course the IJV model.
Yeah.
But you must be aware that to the extent to which those assets are held currently under the UJV model, there has to be that commonality of intention and objective between NNPC and its joint venture partners. They have to look at their joint operations, look at where they are, look at other matters like chemistry, how the assets is performing. Then they can then make a joint decision, because NNPC in itself cannot suddenly decide to just flip into an IJV model for an asset that it's holding jointly with, say, you, for example. It can't just do that. It's something that has to work. The parties need to look at not just legally, there has to be the commercials need to make sense, the structural, the governance mechanisms. There's so many things that go into it. So I think they're working on it at the moment, and I think NNPC will likely be one of the first companies that will push for an IJV. But again, as I mentioned, it's something that they can only do in consonance and working hand in glove with their UJV partners. When they now get to that point where both partners are comfortable enough to take a decision to move to the IJV model, then I'm sure the industry will begin to hear those announcements.
Definitely. We await those moves, very critical for the industry. And, last time we had the conversation, Dangote did not come fully on stream, but now we've seen it come on stream. And recently, the federal government announced the takeoff of the naira for crude sales to local refineries. Of course, Dangote, 650,000 barrels per day petrochemical refinery, is setting the pace with that. From your perspective, how will this transform the downstream sector, improve supply, and make premium motor spirit, also known as fuel pricing, affordable for citizens? Because apart from that, there are other refineries coming on stream and even modular refineries.
Okay, I'll start with availability of supplies, then I'll look at the impact on the sector, then I'll look at pricing last.
Yes.
That's the hardest part of the equation.
Yes.
In terms of availability, yes, that's a 650,000 BPD refinery. Yes, even if PMS is just a portion of what's coming out from that refinery, availability of product is something that's going to improve over the coming months. It's almost inexorable. It's going to happen. So that's a good thing. For those of us who were there at the birthing of the Dangote refinery, I alongside my firm Olaniwun Ajayi, we advised on the financing of the Dangote refinery, and we've continued to support on the financing. Yes, it's something that we're ecstatic about. And those products coming out into the market will introduce the volumes you need. So that's the volume. In terms of the impact on the sector, yes, that's a massive, not just a refinery, it's also sort of a petrochemical complex. So you can imagine the entire ecosystem that is built around that refinery. There are jetties, there are platform operators, tank operations, even what you call it, people that are all marketers. It's just a whole lot of ecosystem that is built around that system. And the fact that that refinery is sited where it's sited, meaning that we are not expecting imports coming from anywhere, it's a plus in itself. So it's going to have a huge impact on the sector. And what is going to happen is that as that refinery continues, it's still ramping up production. It hasn't even gotten up to full capacity. By the time it gets near to full capacity, you then begin to see all these other companies that I mentioned come out. Tank farms will need where to store products. People that do haulage, we need to move things. Supplies, logistics, marine. There's all sorts, even gas supply, the massive gas infrastructure. So all that is massive. So the Dangote refinery in itself, it's a major turning point for Nigeria, not just for the refinery sector, but from all other industries and feeder supply groups that will come out from that sector. Now, on pricing is the hardest part. But I think the point we need to understand is that PMS is a commodity. And the pricing of a commodity is a function of various things, right? And we all understand the pricing when it was being imported. But even now that it's coming from Dangote, so what would happen is Dangote will source for crude as feedstock. The price of the crude will reflect international prices of crude. Whether it's sold in naira or in dollars, it doesn't matter. If it's sold in dollars, it will be sold at the dollar price. If it's sold in naira, it will be sold at the converted naira price for the dollar price. I'm giving the devaluation in the naira, so you then imagine all that has to go into the mix. So that's the feedstock, and then all other components of the pricing will come in. That will then determine the base price at which Dangote will sell to either NNPC or any marketers. Then, of course, those entities are entitled to, perhaps may not, but most likely will, add the margin, logistics, and then they will sell to the pump. So coming on stream of Dangote will not make prices to crash. I can tell you that categorically. It can have a minimal impact on prices, maybe say by the end of this year. That's all you can see. Then gradually, when more volumes get into the market, perhaps depending on the government's posture to the pricing, then we can then see a slight adjustment. But I don't think it's too early for people to get excited. At least nothing is going to happen this year in terms of significant impact on the prices. Further down the line, maybe from next year, maybe government maybe there might be a few adjustments. If the prices of crude adjusts, if it's almost like a dual-edged sword. Increased prices for crude is better for the country in terms of our income and our revenue. But at the same time, that means that the price of the feedstock to the refinery increases, which also has an impact on the pricing. So what we gain on one side, we're likely to lose on the other end. So I think Nigerians need to brace for the fact that PMX is going to be expensive. Yes, it's going to be expensive.
Just a follow-up to that before we go to our next part of this conversation. We've seen delays in the takeoff of the Port Harcourt Refinery Company. We've seen the NNPCL come out to say, they're ready to open up Warri Refinery and Kaduna Refinery for some private sector involvement. Wasn't it important to, at this point, just look at ways of, like what we call financialize them, create the value, and then maybe to the market list them, or just bring them into value than investing, and we've had so much money down the drain without anything to show for it?
Well, first and foremost, I'm not an engineer, so it's
I understand.
I will not be speaking from a position of authority.
Yes. I understand.
But from my understanding of the way these things work and what's happening out there in the market, because we know what's going on there in the market. Those refineries are very old, right? Yes, age in itself is not a problem. Performance of a plant, of any machinery, it's a function of two things: age, but more importantly, maintenance culture. If facilities are maintained in a particular way over a period, yes, it won't be so bad, but age is still a factor, particularly when you're competing with other places where you have newer refineries popping up. So if those refineries, and I suspect they are, in a stage where they just can't produce optimally, it gets to a point like an old person, you want to get him into a race, he just can't run. There's nothing you can do about it. You can try to inject him with things, but a decision might be better to just go and get a newer person to do the race.
Mm.
So I think, and the numbers don't lie. If from a technical point of view, it's just not working, we can't force that conversation. So if the plants really speaking are too old, what will even happen is that the cost of trying to rehabilitate them eventually becomes too exorbitant. And at some point, all that cost will you just lose all that cost.
Mm.
So if the plants are getting too old, what we would then do is to focus on smaller, more chewable modular refineries between 25 to 30, 40,000 BPD refineries in different parts of the country. Focus energy on investing in those modular refineries, newer technologies, easier to get off the ground, because of the way they are configured. You can even start with blends that do not include PMS for the moment. Later, you can ramp up. You can start with 15,000 BP and then increase later on. So personally speaking, I think attention should be paid to focusing on the modular refineries. I think that's the future, rather than focusing on trying to turn around the old existing refineries, because I fear that those refineries have seen their better days, and that the cost required in maintaining them might be too prohibitive.
Oh, interesting and very, very interesting perspective you brought there, which of course policy and stakeholders, policymakers and stakeholders can take a look at. But in his nationwide address to mark Nigeria's 64th independent anniversary, the president, Bola Ahmed Tinubu, GCFR, who also serves as the Minister of Petroleum, announced that the Seplat and ExxonMobil transaction, of course, in the upstream, will receive ministerial approval in days to come. Also, this will be concluded by the regulator, the NUPRC. Will this unlock more opportunities for investment in the upstream sector? We've seen Owando acquire by $703 million the Ajayi Oil Company. We've seen also Renaissance Africa Energy trying to acquire Shell Petroleum Development operations, but of course that is still under review by NUPRC. But will this bolster more of these activities in the upstream?
Well, yes, I think we're on. We're on already. So whether this specific transaction gets approval or not, the market is already moving, and sometimes all you need to do is to react to the market. The market is already moving. Those divestments have happened, and a few more divestments might happen, and there's nothing we really can do about it. All we can do is just structure ourselves around those divestments. It's a good thing. The approval is a good thing. That uncertainty that surrounded the initial feedback in relation to the approvals, we're not quite sure if it's been approved or not, etc. Those sort of certainties is not good. Market needs to have certainty. Sometimes it's better to be certain in a particular direction, even if it's not the optimal direction, than not to be uncertain. So decision makers can then recognize the risk, recognize where the market is going, and then structure around it. That's really pretty much how these things are done. So that approval is something that's long overdue, something everybody will welcome. And of course, it will then increase the confidence in the market for people to continue with their own divestment transactions. And thankfully, NUPRC, for one, I think has been a very fantastic enabler. And the NNPCL, I think, should continue what they're doing, which is they are trying to support the market as much as possible. Engagement, direct engagement, trying to understand how the market is reacting and how the market is operating. And I think that's one fantastic thing. And if they can keep to the timelines that have been prescribed in the PIA in terms of approvals for M&A transactions, or even just merely creation of security, that in itself will also introduce the certainty that we need. So yes, to answer the question directly, it's a good thing. And I think that approval plus all the other approvals that we've seen in the market will, of course, send the right signals to the market.
So looking ahead, what is your outlook for oil production? And can Nigeria achieve the target that the NNPC has set, 2 million barrels per day? Second quarter 2024 report from the National Bureau of Statistics shows that we did 1.41 million barrels per day. That was an improvement from 1.22 million barrels per day in the first quarter of 2024. But of course, people have been asking questions about the future of oil, and the recent OPEC 2024 global oil outlook shows that Latin America, US, Canada, and Africa, where Nigeria is, will be the main contributors to global crude and condensate exports in the period to 2030. It says that oil still remains a major driver when it comes to energy mix. So do you see us playing big here in terms of production, and what must be done in terms of addressing what is an inhibitor to that? What is the challenge, which is crude oil theft?
Mm. Well, we have several challenges. Some of these assets are old. Some of the infrastructure have been around for some time. You've mentioned one of the key challenges, the thefts and the incessant breaches to the infrastructure, which government is trying to manage, but it's still there.
Yeah.
Then, of course, access to financing is a fourth major factor. The ongoing diversification as well as the energy transition drive, which we keyed into, is also a key factor. So all these factors, if you take them together, and I think the key one really is about the facilities, infrastructure, vandalization, and then access to the financing that we need. So I don't think, speaking frankly and practically, that we're going to see any sudden surges in production over the next couple of weeks or months. It's not going to happen that way. It should take some time. And we're aware that a few divestments have happened. So some of the people who bought these assets need time to settle in, take stock, open up wells, unplug things, get production started again, inject fresh capital, then, introduce the discipline that we need to see. And then gradually, yes, we'll see the ramp up in the volumes. But it's not just going to just happen at the snap of a finger. It takes time to happen. So maybe in the next, maybe next year, I think next year. But I think the government is committed. The first thing to notice, I think commitment and working a path is one sure part to push things through. Government is committed to increasing the volumes, and government is doing all it can to encourage all the players to just make sure no interruptions, no frictions, no disputes, just get cracking. So I think if they continue on that path, and then of course all the other factors, a whole lot of which have to deal with external factors which you can't control locally, but to the extent to which the operators can manage them, then I think from next year, we can see a gradual, push from the 1.2, 1.4, where we are currently, to maybe something north of 1.6. But that will be maybe Q3 next year. But it's not going to be a very ambitious move in the short term. Yes.
Chukwuemeka, in 1 minute, when you look at the PIA since it was signed and post-era now, would you say it has been very effective to position our oil and gas industry as globally competitive to face the likes of Saudi Arabia, Qatar, and the rest, UAE?
Yes, quoting again from one of my mentors in the industry, laws in themselves or regulatory frameworks do not achieve change. What they do is to set the tone for change to be achieved. In terms of setting the tone, has the PIA set the tone? The answer for me is a stout yes. What is now left is for the implementers of the PIA, through all other subsidiary legislation, implements, and policy measures, to now do what they need to do to get the market more comfortable with what has been provided for under the law. That's really what's left, implementation. You can take a very rigid law and implement in the way that it makes sense and it works and introduces the right, flexibility to the industry, or you can do otherwise. So I think it's really about implementation now. But whether the PIA, it's a good tone, a good starting point, emphatically, yes, it's a good starting point for the industry. I can say that confidently.
Before I let you go in 30 seconds, Chukwuemeka, the hostilities between Israel and Iran, how would that affect geopolitically the price of crude oil, and what does that mean for Nigeria?
Well, at least in the short term, the prices, we will see a surge in the prices. So on a good thing, in terms of the revenue, more revenue for the country. But remember, on the downstream side, to the extent that the activate price of your PMS has as a component of the price of food, then of course that will negatively impact for those who are hoping for the prices of the PMS to come down. So it's a dual blessing for us. We have more revenue in the long or in the short term, but we need to just keep an eye out on the PMS side, because once the prices keep increasing, then it's going to be difficult to make an argument for the producers or the refiners of the crude to give you PMS prices that are significantly lower. So that's where we stand at the moment.
Yeah, though we also want peace and stability in that region, but
definitely.
Conversation. Thank you very much, Chukwuemeka Osuji, partner oil and gas, Olaniwun Ajayi legal firm. Thank you very much for this conversation. It's very clear that the PIA is a very wonderful document, placed it in place, regulating and guiding the oil and gas industry for the implementation of what is required to move the oil and gas industry to being competitive, creating value, and also contributing to the growth of our economy that will achieve shared prosperity is very important at this time. Thank you very much for this interesting conversation. And hopefully it won't take another 11 months, but we'll have another conversation to review what's happening in the industry. Thank you once again, Chukwuemeka.
Thank you very much. It's a pleasure as always.
Thank you. To our viewers, if you want to get further insights on this conversation, visit the ProShare website displayed on the screen and follow our social media platforms to engage further on this program. Until we come your way again, enrich yourself with knowledge of socio-economic developments around you. It is wise. I'm Ottoabasi Abasiekong. Thank you for watching, and bye for now.